Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking back in on the tech sector. So the video yesterday, we started to see the cracks in the armor. We started to see the signs of weakness, and we saw a dump today. The bulls did buy the dip, absolutely, and it was really watching the tech sector that had me looking for the entire market to bounce, and that was because of this clear level. 52.33 was the must-hold level for the bulls, and we hit that to the penny and bounced. And once I saw that bounce play out for about 15 minutes, I knew the bulls were going to do a good job trying to defend that level. If it broke, it was going to be a waterfall, but if it held, the market would likely bounce with the tech sector. So we bounced right off that level, lining up with the 50-day moving average support. It's a bullish reversal hammer, and a green day will confirm this. We need to break 52.95 resistance and see a solid green day to confirm that the bulls are trying to show back up here. But it is a potential we'll be keeping an eye out for. Well, we'll just call it a clear support level that if 52.33 breaks, that is clearly a bear signal on the tech sector in the short term. So we saw these big names with pullback, and let's look at the weekly time frame first. XLK keeping the exponential supports at this point. If we see a close Thursday below 52.60, it will be the first time since the election, actually since December, where we have lost those exponential moving averages. We'll see a bearish MACD cross follow through, and we'll be on the verge of a bearish TCG cross. So 52.33 is very important support, but so is 52.60 with regard to how we close the end of this week. So bulls, pretty much tomorrow's a really important day to see what kind of follow through we get after a very strong buying of the dip and a long lower wick. And checking in on Apple, we saw a dump, weakest day we've seen on Apple in a long time. Bulls bought that dip, and we had a really nice dip buying opportunity. 5-minute RSI on Apple was down in the low to mid-teens, and the hourly RSI was in the upper teens. And that was an ideal buying opportunity. At first, we're just looking for a short-term bull scout, or a bull scalp, I should say. But it gives you the nice opportunity to, if you want to lock in those gains short-term, by all means do so. But if you want to let it ride a little bit, once you see that bounce play out, once we see the tech sector bouncing to the penny off key support, you can put your stop loss at break even and see what the bulls have in their tank and how much upside we can see here. And they ended up seeing a really big move to the upside. Over $2 from the low, we pulled back a little bit off of that before we closed, but the bulls trying to form a higher low now, and 138.62 is a key support, new higher low at 140.06, and after 5 red days, we'll see if the bulls can see some follow through back to the upside. The daily middle Bollinger Band is lost for the first time in over 3 months. That's now resistance, and that's going to be in the mid 142s tomorrow, and have to be keeping an eye out for that to act as resistance if we cannot get back over it. Weekly time frame is confirming the bearish reversal inverted hammer. We have not confirmed a bearish candlestick on Apple since back at the election. So this is notable, and if we lose these exponential supports, I'm looking at the 4 period of 141.80. If we close below that level, we will likely see a bearish MACD cross starting to form next week, and we'll be watching the 8 period exponential to see if it can still hold. Facebook also seeing a breakdown, losing the middle Bollinger Band support for the first time in over 3 months as well. Bulls did buy the dip. It is a bullish hammer. We have to see follow through, and the bulls need to break 141.55. Same thing, though, with that middle Bollinger Band. It's acted as support for so long, we can now look for it to act as resistance on a back test. So the kind of follow-through we get tomorrow is going to be very telling on Apple and Facebook. And the same thing with the exponential moving averages. The 4 period, almost losing it here at 140.20. And then we would be a lot more likely to see a potential bearish MACD cross if we see further consolidation. This is the first time we are on the verge of confirming a bearish reversal candlestick on the weekly since back in December. So we are seeing the bearish action. The bulls did buy the dip. The question is, do the bulls see another green day to confirm they're back in control after buying that dip? Or do we back test and reject from the daily middle Bollinger Bands, keeping the bears in control of the daily time frame? We'll check back in tomorrow to find out. See you then.